I'm going to play the I don't know card on this because I listen to the news and I watch the data that they're presenting, which I don't believe that they are lying about data. And there is a whole narrative with data to support it that, hey, there are house prices dropping in, and they say nationally and they say Melbourne and they say Sydney and all those kind of things. And the causation and correlation that I see is, well, interest rates have gone up significantly. And so my question is, like, what's happening today from everything that you've just talked about?
I love that.
What's happening today?
I love that for a couple of reasons, right? Because part of where the common narrative goes wrong is they take an aggregate view of the Australian property market. The problem with that is that is not an accurate weighting of the different markets. So if you think about the Australian property market, kind of like the ASX 200 or the ASX 15,264 to be more kind of a little bit more specific, right? So Greater Sydney is like BHP, right? So the market cap of Greater Sydney and Greater Melbourne and Greater Canberra, right? That like the dollar value of all of the combined assets in those areas is so big that if they change, they have an asymmetrical impact on the rest of the aggregate value of the property market. So I've been using this example quite a lot recently, and it actually just happened the other day in real life, which is really funny because BHP is the largest company on the ASX by a significant shot. If it goes down by 10%, and if you imagine all other companies didn't actually change, but then you look on aggregate at the ASX 200, the ASX 200 would drop, right? So this is actually what is happening. So if you look at the national median house price on aggregate. Yeah, of course. Yeah, the national median house price is dropping on aggregate, right? But that doesn't mean that is happening everywhere in the same way, right? And then this is actually the interesting point. Now, a lot of people right now, so consumer sentiment right now is at pretty similar levels to when COVID hit and pretty similar levels to when GFC hit. So why don't we take a little look at the GFC? Because this is really interesting, right? Because in the GFC, everyone thought the world was going to end, right? And also, property prices tanked, right? So the national aggregate median average dropped by 8.5% to 9%. We'll call it 9% for the point of the discussion.
I was just too young to take advantage of it. I didn't realize what was going on in the world at this point. I was more interested in my tan and where I was going to go on the weekend than the property market at this point in my life.
Yeah, fair enough. Well, we've actually got one person on our team who actually started investing during the GFC, but that's a whole other story. Anyway, that's a whole other story. So, but let's take a look at the GFC because on aggregate, the property market tanked, right? During the GFC, it tanked by about 9%, which is massive for like a multi-trillion-dollar asset class. That is huge, right? The value of residential real estate in Australia is like 2.6 times the total value of all businesses in Australia. It's massive, right? So for that to tank by 9% is phenomenal. Here's the rub, right? During that period of time, 63% of suburbs actually grew in value. 63% of suburbs grew in value. So we did a study and we looked at the period of time from January 2008 to July 2009. So we tried to capture the whole kind of moment that all of that stuff was going on, right? Property prices dropped at the same time that interest rates dropped, by the way. Interest rates dropped by, I can't remember, 3, 4, 5. It was a lot, right? So interest rates dropped because everyone was freaking out. They had to stimulate the economy. House prices dropped, and that was all consumer sentiment based. So we then looked at it and we said, okay, well, what actually happened on a more granular level? So we found that, as I said, 63% of suburbs still went up in value. Of the suburbs that went up in value, the average growth over that period, which is like 18 months, was 9.04% average growth across the suburbs that went up. And also the average price of that was 382,763. So that was in the lower quartile. So that was like more affordable properties.
Yep.
On the other end, the negative growth suburbs on average went down by 7%. On aggregate, and the average price of those was actually well over $500,000. So they were the more expensive suburbs. So what we can deduce from that is really interesting. So not only can the market go down, but in fact the majority of the market still go up. But in fact, more affordable properties tend to perform better when consumer sentiment is lower.
Hey, fellow business owner, if this topic and value-packed short video has resonated with you at all, and you want to dive deeper into being a full stack business owner, check out the full episode by clicking the link on your screen or in the description right now.